What does it mean to recast your mortgage? A really good example is if you buy a house in Florida and you haven't sold your home up north yet. You got $1 million loan down here in Florida, and the house up north, which sells 6 months after you purchased your Florida home, profits you about $500,000. Well, you can take that $500,000 and pay down half of your $1 million loan. But your loan was based on a $1 million balance, and your monthly payments would be twice as much as a $500,000 loan. So by recasting, they re-amortize what your monthly payments would be. It doesn't reduce your interest rate. However, you're not paying the refinancing costs for a new mortgage with a lower interest rate. You're just simply re-amortizing your monthly payments. That's recasting a mortgage. We do have a product that's even better. Contact me, Ruth, at 4flloans.com or 4ncloans.com to learn more about some great products. Let's give you an example of recasting a loan using the $1 million loan amount. The reason you would want to recast a loan is because you have a large deposit that you want to make, and you use that deposit to lower your loan balance. In the case that I discussed, we start with $1 million. You sell your home up north, you have $5,000 to pay down that $1 million loan. This way, you can lower your monthly payments, so it's as if you had a loan for $500,000 instead of $1 million. There's a small recast fee, and that varies depending on the lender, but there are no financing costs when you recast your loan. However, that also means you're getting the same interest rate. You're not able to lower your interest rate just because you're recasting the loan. Here's an example. If you start off with a $1 million loan balance, your first month, you're going to make $500,000 in interest payments and almost $1,000 towards principal, and it'll bring your loan balance down. This continues for 6 months, and then you make an extra payment of $500,000 plus your regular monthly payment. So now you're paying about $5,000 in interest and over $500,000 in principal payment that 1 month. But the next month, your interest payments drop dramatically, but you're still making the overall $6,000 a month payment, but $3,500 is going towards principal. This allows you to reduce your overall loan term under 30 years. I believe it's 9 years in this situation. Now, if you're recasting, though, you're making a monthly payment of only $3,000 a month with the new mortgage payments. This is as if you took out an original loan for $500,000. Your monthly payments would be about $3,000. So $2,500 of that $3,000 goes towards interest and $500 goes towards principal. And your ending balance will pay off in 30 years.